and gentlemen, after we hear from the government of the Republic of Indonesia, and now we're going to invite our next speaker. He will talk about global development and the middle income trap. So please join me to welcome on stage Mr. Albert Park, Chief Economist of Asian Development Bank.
Good morning. As a representative of the Asian Development Bank, it's really a great honor to participate in BRI Outlook 2025, especially given BRI's historic leadership over many years in promoting financial inclusion and sustainable development. If I can get my slides up. I want to talk today about 5 topics. The first is to talk about the economic outlook for Indonesia and Southeast Asia. Second, I want to talk about what we can learn from recent economic research on when microfinance really works to promote growth and raise incomes. Third, I want to talk about MSME development in Indonesia and Asia. Then I want to talk about the policies that can support MSME development and financial inclusion. And then finally, say a few words about how to support MSMEs in the green transition. So our most recent projections or predictions for growth in Indonesia is that growth will reach 5% this year, and inflation will be 2.8%. Now, this is, I think, reflects very resilient growth in Indonesia. And even though, 8% is a worthy target, I think 5% is not too bad, and in fact is slightly above our expected growth for Southeast Asia and for developing Asia as a whole. Now, in Indonesia, growth in recent years has been supported by a very robust private consumption and more recently expanded public investments, as well as you can see from this figure, which presents the most recent data on purchasing manager indices. At the end of last year, we started to see a recovery of manufacturing and exports from Indonesia. But overall in the region, you can see that there's quite a diverging pattern where some economies are doing very well, including the Philippines. So anything above 50 is expansionary, highlighted in green, or anything in red is below 50 and contractionary. And you can see some economies in the region are still contracting as of the most recent data in December in terms of their manufacturing production, including Vietnam, Korea, and Malaysia. On services, we see quite robust expansion in all of the major economies for which we have data. And I think that's also the case in Indonesia. Now, the question I've been asked the most recently is what's going to happen to Asian economies under the new US administration and the very aggressive policies that might be implemented, especially with respect to tariffs, but also other policies that affect the US. And so at ADB, we've been doing some study of this problem. We commissioned 2 studies, one more focusing on a global macroeconomic model, another more focused on a very detailed trade model to look at tariffs. And the results I present here are from our macro model, and it suggests that the impacts of aggressive US policies in terms of a 60% tariff on China, 10% tariff on all other countries, as well as restricted immigration into the US and expansionary fiscal policy, the sum of all of those policies together still have relatively modest effects on economies in Asia. Even China, which is the most negatively affected, will only have their growth reduced by 0.3% per year. And if you look at a trade model, those growth effects are even smaller. And they don't even account for other economic responses that China may make. And one reason for that is that China, the exposure, the importance of exports to the US, both direct and indirect, has really fallen over time and is now less than 3% of their GDP. You can see here that our model actually predicts a slightly positive effect on Indonesia's economic growth. So our message is to governments in the region that Asia has shown incredible resilience to a whole sequence of shocks in recent years, starting with the pandemic, high commodity prices, geopolitics, et cetera. And even though the uncertainty makes it difficult to plan and it makes it difficult for firms to make investment decisions, there's no real need to be fearful that Asia is resilient and can respond, I think, just by maintaining very sound macroeconomic management and continuing to pay close attention to the changing both external and internal environment. So next I want to switch gears and talk about what research can tell us about when microfinance can really be transformative. And over a decade ago, Abhijit Banerjee and Esther Duflo wrote this book called Poor Economics, where when they talked about microfinance, they actually expressed some skepticism about whether microfinance could really deliver higher incomes and consumption in a sustainable way. And that was supported by a symposium volume that presented 6 randomized controlled trial studies, so pretty rigorous studies in different countries in the world. And they really did not find very strong evidence that the microfinance programs that were evaluated had really significantly raised incomes and consumption, although these tended to be short-run evaluations. So last month, I was at an event with Abhijit Banerjee, and he gave a talk trying to revisit the findings of poor economies to try to ask, what did we get right and what did we get wrong? Because when they wrote that book, there was still relatively few randomized controlled trial studies. And today there have been many more. And one thing that he found was that the skepticism of microfinance may have been premature. That even in a study of India where they followed after 6 years after a microfinance program had been implemented, that suddenly the effects were quite substantial and significant. And they were driven by a subset of gung-ho entrepreneurs who had really used the opportunity to access credit to make bigger investments and achieve very large increases in incomes. And so this, of course, is a great story for MSME development or entrepreneurship. Now, I've also participated in a study evaluating a microfinance program that was financed by government to target poor villages in China. And in this study, we found very large increases in income. And this was only after about a year or two. So we found 32% increase in incomes and an 18% reduction in poverty. And when we tried to understand why we were finding larger effects in China than some of the previous studies in other countries, we realized that there's a number of contextual factors that really influence when microfinance programs can be impactful. So for example, programs in areas where prior access to credit is very limited, you see stronger impacts of microfinance on income growth. When the loan sizes are large enough relative to household incomes, then you also see bigger impacts. Certain features of the loan, including the interest rate, a lower interest rate, and fewer repayment frequency, also tend to increase the impact of these programs on incomes. And finally, in rural contexts where relatively fewer of the laborers are engaged in wage employment, that they're really focused on self-employment and agriculture, we see bigger impacts of microfinance. And I think it's because it helps them finance out-migration to be able to obtain much higher wages in outside labor markets. So you can see this visually in this slide where for these different environmental factors, repayment frequency, interest rate, the ratio of wage employment time to self-employment time, and share of households with bank loans, there's a clear relationship. So the y-axis here is the size of the impact of microfinance access on income growth. And you can see that there's a very clear relationships that I just pointed out. And one thing that's interesting here is that China, in the program that we evaluated, is on the low end in terms of repayment frequency, interest rate, wage employment time, and exposure to bank loans prior to the program. And so all of those help us understand why in China we see much bigger impacts. And it just reminds us that context matters, and if we want to maximize the impact of microfinance programs, we should keep these factors in mind. Okay, now let me say a few words about the progress in MSME development in Indonesia and in Southeast Asia. So here you can see that in Indonesia, MSMEs account for about 60% of the workforce, and that's similar to other economies in Southeast Asia. Other economies, some are higher, some are lower. If we look at bank loans, so on the left-hand side, you can see the orange and the green bars that the share of total loans in Indonesia that are going to MSMEs has been growing in recent years and is now about 20%. And 20% is very similar to the regional average for all of Asia. If you look at MSME loans as a share of total loans compared to other Southeast Asian countries on the right figure, you can see that, again, Indonesia does pretty well, but if you look at MSME loans as a share of GDP, it's smaller, just about 7%. So there's progress, but room for improvement. If we look at equity financing of SMEs, the left-hand side, again, is showing data for Indonesia, and you see a rapid increase in the equity market for MSMEs thanks to the initiative of creating this acceleration board, the IDX in Indonesia. And the right-hand figure on the x-axis is plotting the growth rate, and you can see Indonesia is growing at over 50% a year. But the y-axis plots the market capitalization as a share of GDP. So you can see that Indonesia is very low compared to many other countries. So it's growing fast from a small base, good direction of change, but still much room for progress. Now, at ADB, every year we publish the Asia Small and Medium-Sized Enterprise Monitor. And we work closely with a number of government and statistical agencies in over 20 countries, including Indonesia, to try to monitor the progress, present the latest data. And in our last issue, which was launched in just last December, we present some of our recommendations for how to create MSME ecosystems that can really support resilient growth. And one thing we suggest is promote business clustering, which BRI has been a leader in Indonesia. Another one is to have a centralized policy framework that can support digitalization of MSMEs. It's also important for inclusive growth to make MSME development strategies responsive to gender and also to support the green transition of MSMEs. It's important to create a market-based financing capability to support viable SMEs. So that requires a certain amount of institution building. And finally, as a research department, which I direct at ADB, it's important to continue making progress on developing better statistics and consistent definitions for how we define MSME development. And that's been an issue in Indonesia because the definitions and tracking of MSME performance through different data series has been a bit mixed and then has been changing over time. So among those, among these recommendations, the one I want to really focus on is the third one, which is about digitalization. Because we know that digitalization, aside from finance, digitalization itself can really help MSMEs grow much faster and realize their growth potential. Because digitalization can help small enterprises overcome fixed investment requirements that are often faced by traditional businesses. So for instance, you do not need physical retail space if you're selling goods online. You can reach a larger number of customers, both domestically and, if linked properly, even internationally, and enter export markets. So digital platforms are key to removing the typical advantage that large companies faced. And you can also use digitalization to improve how you manage your own enterprise and how you access information and become more innovative. So in addition to supporting MSME development through digitalization, which is important for inclusive development overall, because we know MSMEs tend to employ more workers and employ more less skilled workers. Digitalization is also important for improving financial inclusion itself, so financial access for a larger number of citizens. So one example of this, which I think exemplifies the way in which governments can support this digital capacity for financial inclusion, is a program that ADB is supporting called Promoting Innovative Financial Inclusion. And we're helping the government of Indonesia support tech-enabled opportunities to further financial inclusion. That includes supporting them in including these elements in the National Financial Inclusion Strategy that the country has. Also, we have supported the establishment of an East Indonesia Financial Innovation Lab to help regional banks identify promising technologies to advance financial inclusion. And then we're supporting digitalization for financial inclusion in a number of important ways, from building the digital infrastructure, the payment system, strengthening regulatory frameworks, and supporting government efforts to improve financial and digital literacy. So an effective strategy really needs to address all of these different elements. Another way in which we're supporting financial inclusion is through our support for bonds that are green or social. So just over a year ago, we helped Indonesia launch its first social bond, and this was a project where we worked with the Housing Loan Liquidity Facility of Indonesia to help provide more finance for affordable housing for low-income earners. And to do that also required building up the right regulatory structure and standards for issuing social bonds in the country, but then working with the partner to actually understand the technical issues related to actually issuing the social bond, et cetera. And it's a good example of how we're trying to promote green and sustainable finance to support SDGs all over the region. Now, Asian Development Bank is positioning itself to be the climate bank for Asia and Pacific. So we're putting enormous emphasis on supporting the transition to net zero in the region. And we've been leading a discussion of green financing for MSMEs in the APEC Financial Inclusion Forum process. And we emphasize, again, that progress needs to be made in a number of dimensions to help facilitate MSMEs to participate in reducing carbon emissions. One is just closing knowledge gaps and supporting capacity development among financial service providers and MSMEs, making sure that MSMEs are included in sustainable finance taxonomies and existing frameworks for green finance, to help regulators develop the right regulations and incentives, and of course, again, emphasizing the importance of taking advantage of fintech and other technology opportunities, and now, of course, AI very prominently has the potential to really improve the way in which financial institutions can quickly assess creditworthiness and provide finance to a much broader number of citizens. So one example I wanted to give about how governments can support the green transition of SMEs is an interesting program run by the central bank in Malaysia. So they have a low carbon transition facility that provides working capital finance and capital expenditure to support MSMEs to transition to low carbon and sustainable operations. I know BRI also has a number of sustainability initiatives. This in Malaysia is coming from the central bank itself. They've also launched a program on greening the value chains, where SMEs are really critically for all companies to reduce their Scope 3 emissions. And so this is another measure to support MSMEs to join the green transition earlier rather than later. So let me conclude with just a few final thoughts. The first is, I do believe that microfinance has great potential to raise incomes and promote growth, but context and how you design programs still matters. Second, despite good progress being made, there still is quite a lot of scope to continue expanding financial inclusion in Indonesia and many other countries in the region, whether it be through loans, equity, or social bonds. Third, digitalization is really a key. And both the World Bank and ADB are now really putting much more emphasis on their digital and supporting digital development strategy in their member countries. It's key for helping to unleash the promise of growth for MSMEs and to promote financial inclusion, but requires a lot of institution building and a multi-pronged strategy. Fourth, increasing priority should be given to help MSMEs reduce their carbon emissions, including by expanding green finance. And finally, all of these efforts will require better efforts to continue to improve the quality of data collection so we can study what's working and what's not working in different contexts. Thank you very much.